The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
A very warm welcome to Squawk Europe. I'm Steve Sedgwick and these are your headlines. Auchincloss is out. BP appoints Meg O'Neill as the CEO less than 2 years into Murray Auchincloss's tenure, making her the oil giant's fourth boss in 6 years. European leaders gather in Brussels for one of the most pivotal summits in years as they try to thrash out an agreement on how to fund Ukraine. And it's Super Thursday for Europe's central banks with decisions from the Riksbank, Norgesbank, Bank of England and ECB all ahead. Don't miss our live coverage throughout the day starting at midday with Decision Time. If there is a clear and conclusive deal out of Brussels today, it will be extraordinary, given some of the language we are seeing on arrivals. Bart de Wever is the PM of Belgium. Belgium's moment in the spotlight because that's where they hold these Euroclear assets that they're trying to use to finance some form of reconstruction and support for Ukraine as well. But de Wever today says the Commission needs to give unconditional guarantees on liquidity on Euroclear. It's essential. We can't be flexible on the need for guarantees on the liquidity. We also need absolute protection against any Russian counteraction. They're worried about the Chinese and others, Russian allies, joining Russian counteractions. Other options for financing Ukraine are chartered waters. Russia can confiscate assets from countries which they say harm their interests. So he is incredibly concerned. Ritika joins us live from where he's been speaking. Ritika.
Yeah, Steve, well, I'm here in the Europa building. We're seeing the leaders are just starting to arrive and they're heading in towards that crucial European leaders meeting where they will be seeing if they can get that qualifying majority of European nations in favor of supporting Ukraine financially, but of course, by using that controversial plan of Russian frozen assets. It isn't looking so clear cut as you mentioned there. It looks to be getting more and more complicated as we are inching closer and closer to that deadline. The European Commission, for its part, wants to use 210 billion of these euros of these frozen Russian assets that are in Europe as collateral to fund a reparations loan to Ukraine. The idea would be to provide 90 billion euros to cover 2/3 of Ukraine's urgent financial military needs over the next 2 years. The Russian central bank we heard from last week, they said that they would be suing Euroclear in response to this EU loan plan. But it isn't just Moscow that's unhappy. You talked about Belgium there, Bart de Wever issuing some lines here. They are really concerned about the huge legal financial costs that they would be on the hook for if Russia does indeed successfully sue Euroclear. But it isn't even just Belgium, it's Hungary, it's Slovakia, and now Italy, Malta, also opposing these plans, some of them proposing alternate measures to help finance Ukraine. The big risk is if this EU proposal fails, if Ukraine doesn't get that urgent support it needs, it could run out of money by April, Steve. And what does that mean for its negotiating position with those US-led peace talks? The stakes also high for Europe. What is their role in these peace talks if it cannot even get this plan through today? And as you mentioned earlier, the US now putting pressure on Europe to abandon these plans for seizing these Russian assets as well, Steve. So it doesn't look like it's going to be a clear-cut decision today necessarily.
Brilliant coverage. Thank you very much indeed for that, Ritika. Right, let's get another voice on this one as well. Benjamin Godwin, who is partner at Prism Strategic Intelligence Limited and an expert on Ukraine as well. Benjamin, we just had a couple of words off camera. Mm-hmm. There is so much at stake for Ukraine, of course, but especially for Europe in this debate that's going on in Brussels now.
Yeah, I think you're absolutely right, Steve. The first thing to say is obviously Ukraine needs this money just for its budget, just to maintain government operations for the next 2 years. That's essential. But politically, I think it's very important for Europe to make a decisive move in the next 2 days. Because, as we know, talks have been happening between the United States and Russia over the last 9 months, 10 months, without really European involvement. Europe needs to insert itself in the conversation here. And so, by doing this, if it is able to take these assets, lend the money to Ukraine, it suddenly has a bargaining chip with the Russians.
There's a chance that Ursula von der Leyen will be speaking in a second, so I may interrupt this conversation. We'll come back to it afterwards. But Benjamin, even if Europe can, we're going to listen to Ursula von der Leyen. I believe she's speaking in English. We'll come back to you in a moment, Benjamin.
Peace with strength, and for that, Ukraine needs to have a secure funding for the next 2 years, the year 26 and 27. It is good that the European Council has committed itself last time that we will close the financing gap of Ukraine for the next 2 years. We're speaking about 137 billion euros that are necessary. It's the estimate, our own estimate, and the estimate of the IMF. And we have committed to cover 2/3 of it, 90 billion euros. I have made 2 proposals, 2 options on the table for this funding. One is funding through the EU budget, borrowing against the budget, and the second possibility is the reparations loan. So today we will have the discussions about which one of the 2 we will use. It will be intensive discussions. For me, the most important part is that at the end of the day, we have secured the funding for Ukraine for the next 2 years.
Are you confident that you will go to Brazil to sign the final Mercosur?
We will also have a discussion on geoeconomics today, and this is a discussion about our vulnerabilities, our competitiveness, our global competitiveness. And here is clear that our over-dependencies are a stumblestone to competitiveness. We have to get rid of our over-dependencies. This is only possible through a network of free trade agreement, and therefore Mercosur plays a central role in our trade agreements. It is potentially a market of 700 million consumers, like-minded countries that want free trade together in Mercosur. So it is of enormous importance that we get the green light for Mercosur and that we can complete the signatures for Mercosur.
What are you going to say? What are you going to say to Belgium?
I cannot hear you.
Are you confident that Belgium might agree? Is there enough for them?
I totally support Belgium that they insist on having their concerns and worries accommodated. And we are working day and night with Belgium, and I want to thank the Prime Minister for his personal engagement here. It's absolutely understandable, and I support that if we take the reparations loan, the risk has to be shared by all of us. This is a matter of solidarity, a core principle of the European Union.
What happens if there is no agreement today on the frozen assets? What happens then?
We have to find a solution today. The President of the Council said, and I support him in that, we will not leave the European Council without a solution for the funding for Ukraine for the next 2 years. And the 2 options, one of them then has to be agreed in the European Council.
Okay, that was great timing there, because we've got Benjamin Godwin on set as well from Prism Strategic Intelligence. She was saying exactly what you said. Europe has to seize this moment for 2 reasons. One, Ukraine desperately needs the money for the next 2 years. But 2, and perhaps more importantly for Europe as well itself, it has to stop being a geopolitical pygmy and back up its vast economic wealth with a stronger position in the world and insert itself into the dialogue.
I think you're absolutely right. Europe, in terms of the funds that it has and actually the defensive capability that it has, at least on paper, can be a huge support to Ukraine. But as we've seen, Europe has been dragged on and on into this conflict without making positive steps forward like the Americans are doing at the moment. Yeah. You know, the fact is that we may not like a lot of the things that are coming out of the Trump administration in relation to negotiations on Ukraine, but more is being done on the American side to get this thing to an end than being done on the European side. The Americans have found leverage with the Russians. The Russians are using their leverage. So far, the Europeans have not.
Do you believe Europe can improve its performance and get itself in an equal footing, or certainly a better footing than it has now, at those negotiations?
Well, I feel the Europeans have been sort of cajoled into doing this. Why have they not done this previously? But I think, yes, I think they can make this decision. It's an enormous decision. Let's not be flippant about it. What the Europeans are planning to do has all sorts of risks, particularly for Belgium, but for the entire European continent. So we shouldn't be flippant about this decision. But if Europe is serious about getting leverage with the Russians, finding a solution that will support Ukraine beyond a peace agreement, the Europeans do need to do something like
Benjamin,
this.
you're a Ukraine expert. I spent a lot of time in the country, certainly pre-war as well. One thing that a very senior politician said to me when I first went to the country in 2014 was that I became a politician because it is the most corrupt country on the planet and I want to change the perception. Unfortunately, Ukraine still has a corruption problem. I think a lot of our audience from either side of the political divide will question, even if the money gets made available, whether it will be used wisely.
I think it's a very good question. We've obviously seen this huge scandal break out within the energy sector in Ukraine, and that's gone right to the top of the administration, to Mr. Yermak in the office of the president. So we should be serious about that. But we have also seen over the last year that the independent investigatory bodies have not been frightened to take on these politically involved cases. So, for example, we saw Zelensky earlier in the year try and remove some of the powers from the independent investigative bodies. The people of Ukraine and these bodies stood against that, and now we see an investigation that goes to the heart of the Ukrainian government. So it's ugly, but it is perhaps a sign that things are changing.
Well, that's good, because it needs to, because it could be just a magnificent country and has a lot of attributes, but it also has an enormous number of deep problems that go way back before the fall of the Berlin Wall as well. In terms of your hopes for 2026, this devastating war will be 4 years in the making, or 4 years in February, which just seems extraordinary as well. Do you see anything in what the US is doing, from the language from the Russians, and I think that's a more tricky one as well, that says this war will end in 2026?
There's just been some recent polling coming out of Ukraine that suggests that the Ukrainian people are ready for some kind of pause in the hostilities. It's absolutely...
I spoke to a senior politician quite recently, and he looked like a broken man off camera. He was so exhausted.
Absolutely. We had a colleague in Ukraine the last week or two, and they're facing power cuts most of the day now, particularly in the smaller cities. Maybe Kyiv is a little better. They're exhausted. But what this polling shows is that Ukrainians are absolutely clear that they do not want to see territorial concessions to Russia. So there's obviously the Russian demand to give up the whole of the Donbass region. Now, Ukraine spent more than 10 years building this incredible defensive line across the Donbass region. They will not want to give that up. And Ukrainians, they fought so hard over the last 3 years. It would just be awful if they were pushed into this.
So just the same question, but in a different way. Do you think the current initiatives to end this war will bear fruit?
The key question is there anything different when there were talks in February, March, in the summer?
From the maximalist demands of Mr. Putin, you mean?
I think there is a change. We've seen some concessions from Zelensky over the last weekend around NATO membership.
But we all knew that Ukraine was never going to get into NATO, and the people who followed this internally, it was a long way away.
But expressing that was important.
Yes.
The US has sort of suggested that it could provide security guarantees. We're quite sceptical as to what that really means. But it'll be
better than the Budapest Memorandum.
Absolutely. But I think there is a sense that, particularly as you see the urgency in Europe, if a deal is not made now, who knows what's going to happen to Ukraine over the next year? It's very concerning.
It is indeed. Benjamin, thank you very much indeed for joining us, and thank you for bearing with us with that amazing live doorstep with Ursula von der Leyen. Really nice to see you, sir, and we hope that obviously those talks can bear fruit. Benjamin Godwin, partner at Prism Strategic Intelligence Limited. Coming up on the show, copper prices are amongst those metals soaring this year with little sign of a slowdown. Charlotte actually spoke to the CEO of one of the world's largest copper mines, BHP, about his outlook for the metal. Executive Decisions is the new podcast from CNBC, where I ask powerful leaders about their decisions that changed everything. I'm Steve Sedgwick. Here's the CEO of the London Stock Exchange Group, Julia Hoggett.
There is no justification whatsoever for not doing the right thing, even if the right thing is hard to do. Which also means that if the context changes or the information changes, it is absolutely fine to also change your mind.
That's Executive Decisions with me, Steve Sedgwick. Get it wherever you're listening to this. Tight supply, surging demand and rising geopolitical uncertainty have pushed metals to a strong year, with many analysts, of course, expecting this will continue in 2026. The boom in raw materials has also given UK miners a boost and driven the broader FTSE higher this year. Charlotte joins us. And not your normal subject, the metals and miners, but you've had a brilliant interview with one of the top men.
Yeah, a really fascinating one. You know, we know that critical minerals have been the headlines all the time recently, and that was interesting to hear from the CEO of BHP say, look, just a couple of years ago, people didn't care about mining. We were not in the minds of the policymakers in the world, and now certainly they are the heart of all the conversations. So really interesting to catch up with the CEO of BHP, Mike Henry. Of course, we talked about copper. They have the biggest copper mine in the world in Chile called Escondida. They're trying to upgrade it, spending billions there, but that takes time to get some returns on those investments. Of course, the failed M&A move with Anglo because of their copper assets as well. So we had a chance to catch up on the copper market and what it looks like for 2026.
Is critically important. So it underpins the functioning of the everyday economy. It's also important for decarbonization and digitalization. It's about a $300 to $400 billion per annum market versus rare earths, which you all would have heard about, which is about $20 billion per annum. So it's a very large market. Demand is growing strongly. We expect it's going to be up by 70% between now and 2050, but supply is becoming more and more difficult to bring on. Fewer mines are being found. The mines that are being found are oftentimes smaller, lower grade, in tougher jurisdictions. And so it's hard to bring those mines on quickly. And what we've seen in the course of the past year is the market go from a slight oversupply. So if you roll back 12, 18 months, people were expecting that this year was going to be a little bit soft. And all it took was a few disruptions at a few copper mines around the world to all of a sudden send the market into deficit and to see copper prices reach record highs. We're expecting that between now and the end of the decade, that crunch is only going to get tighter. Now, BHP is the world's largest copper producer. We've grown by 30% over the past 3 years, more than any other company in absolute terms. And we've got 4 big major growth projects in copper around the world. And so it's a pretty exciting time for us, but a critically important time for the world as we seek to bring on more copper and other critical minerals to feed ongoing growth and some of the big transformations that are underway around the world.
So in terms of pricing for copper, I saw a note from Citi just a couple of days ago. They see copper hitting $13,000 per ton in early 26 and even $15,000 by the second quarter. Is that the scenario that you're looking at, and how sustainable is this?
So it's always very difficult to predict exactly where prices are going to go. What I can say with a high degree of confidence is the market's tight right now, and it doesn't take much to send prices north. And we've seen, for different reasons, a near doubling of gold price over the past 12 to 24 months. We're seeing that spill over into silver now, largely driven by economic factors or uncertainty around the US dollar. In the case of copper, of course, you've got the supply and demand dynamic that I mentioned. But in addition to that, you've got growing attention in the broader basket of commodities that could be supportive for copper pricing as well.
So that was Mike Henry, the CEO of BHP, talking about the tightness in some of these critical minerals there, particularly copper. And look, some analysts say that next year, actually 2026, could be you will see a real crunch when it comes to supply in copper. There's been a lot of stockpiling this year, particularly in the US, some fears of refined product tariffs coming to the pipeline further down the line, so they've been stockpiling. There's really 26 could be a really big crunch year there. So they're looking at how they can expand their capabilities there. Of course, the failed M&A with Anglo was part of this rationale. That was part of the big strategy of Mike Henry. What BHP was very much focused on iron ore. He's the one that pushed the company into copper, into potash as well. They say population is growing, fertilizers are also something for the future. So that's been part of the strategy. But certainly when it comes to M&A, that hasn't worked out as he was hoping.
Okay, that's really interesting, because it's amazing that a lot of the analysts are talking about supply crunch next year as well. Others might argue that actually because of the renewed interest, that actually a lot more capacity is coming online in the next couple of years, and that's going to douse some of the price.
But that takes a lot of time.
It does, but I wonder,
billions of dollars, and it takes more than a decade for a sediment to potentially turn into.
But is it speculation and stockpiling that's led the price higher, or real industrial demand? And here's a question for you. Actually, I'm not going to ask that one. Tariffs, China demand or AI? What would you say, according to your interview there, which was great, by the way, appears to be the biggest factor on their mind?
Yeah, well, like you were saying, there's an element of speculation, and fears that make people just stockpile even more. But it was really interesting also to hear him that he was in the White House just in August, that there's a lot of supply. There's a real shift of policies coming from the Trump administration, and they have a potential joint venture with Rio Tinto in the US for the Escondida mines in Arizona, and huge potential there as well. So he was saying, mining is at the front of all the thinking of all policymakers, particularly in the US. So, that's good. That's business opportunities, like in the US. Also, potential political interference. They have to navigate all this geopolitical context, which makes things a little bit trickier.